Hello everyone, and welcome back to Explain the Charts. Today, on November 5th, 2025, we're doing an in-depth analysis of one of the market's most important stocks, Microsoft, ticker symbol Microsoft. We have a fascinating situation where the news seems overwhelmingly positive, yet the price action has been decidedly negative, so we're going to break it all down for you. We'll start with the recent headlines and then move into a detailed technical analysis across multiple timeframes. Let's begin with the big picture on the daily chart. First, the news. The headlines have been a mix of incredible triumphs and cautious warnings. On one hand, Microsoft smashed its fiscal Q1 2026 earnings, beating analyst expectations on both earnings per share and revenue. Azure and cloud services revenue surged an incredible 40% year-over-year, showcasing the immense demand driven by the AI revolution. Furthermore, Microsoft has solidified its partnership with OpenAI, strengthening its competitive advantage in the AI space, and announced a massive $15 billion investment to expand data center capacity in the UAE. With this backdrop, it's no surprise that every single Wall Street analyst covering the stock now has a buy rating on it. However, despite this overwhelmingly bullish news, the market has reacted with fear. The stock took a significant tumble following the earnings announcement. Investors are raising concerns over a massive $35 billion AI spending plan and a sudden surge in capital expenditures, which are now expected to increase throughout the year. This reverses previous guidance and sparks fears about pressure on profit margins, even with strong top-line growth. Microsoft's CFO also acknowledged that Azure's growth could have been even higher if not for capacity constraints, meaning they are leaving money on the table for now. Adding to the pressure, we've seen reports of insider selling and general profit-taking after the stock's powerful run-up to all-time highs. So the central conflict for investors is whether Microsoft's aggressive spending is a brilliant long-term investment in AI dominance or a short-term drain on profitability that was not properly priced in. Now let's see how this drama has played out on the daily chart. We can see a powerful uptrend leading into late October, culminating in an all-time high of $553.72 on October 28th. This was the market pricing in perfection ahead of the earnings report. However, the reaction to the earnings and guidance was swift and brutal. Let's zoom in on this critical period from late October to today. As you can see, the day after the earnings call, on October 30th, the stock gapped down significantly at the open and closed with a large red candle on heavy volume. It fell again the next day, October 31st, showing strong selling pressure and a clear rejection of the highs. This created a bearish reversal pattern, immediately shifting the short-term market sentiment from bullish to bearish. The price has been trying to find support since then, but has remained well below the pre-earnings levels. This sharp drop is a classic case of buy the rumor, sell the news, where expectations were so high that even a fantastic report wasn't good enough. The key resistance level is now the gap between the close on October 29th, around $541, and the open on October 30th, around $530. For bulls to regain control, they must first push the price back up to fill this gap. Now let's switch to the 1-hour chart to examine the price action leading up to this reversal. This view shows the period from mid-October up to the day of the earnings release on October 28th. You can clearly see a steady, confident climb throughout this period. The price action was constructive, with pullbacks being bought up, indicating strong bullish sentiment. On October 28th, you can see a massive gap up at the market open as anticipation for the earnings report reached a fever pitch. This shows the extreme optimism that was priced into the stock right before the guidance spooked investors. This context is crucial because it explains why the subsequent drop was so severe. The market was positioned for nothing but perfect news and perfect guidance. To see what's been happening since that drop, let's drill down to the 15-minute chart. This chart shows us the intraday battle between buyers and sellers starting on October 31st, in the immediate aftermath of the sell-off. We can see the price trying to carve out a bottom. Notice how the price bounced off the $514 to $515 area multiple times over the last few trading sessions. This level is now acting as a critical short-term support. On the upside, any rally attempts have struggled to overcome the $519 to $520 zone, which is now the first line of intraday resistance. The price action is currently consolidating between these two levels, suggesting a period of indecision. Traders are waiting for a clear break below support or above resistance to signal the next short-term move. The relatively low volume during this consolidation compared to the sell-off days suggests selling pressure may be temporarily exhausted, but buyers haven't stepped in with conviction yet. Alright, let's switch back to the daily chart to recap and discuss what to look for next. The battle lines are clearly drawn. The major overhead resistance zone is between $540 and the all-time high of $555. It will take significant buying pressure to overcome this area, which is now full of investors who bought at the top and may be looking to sell at break-even. On the downside, the first key support level is the recent low around $514. If that level breaks, the next major psychological and technical support level is the $500 mark. Below that, we would look towards the September lows around $495. So, what are the likely scenarios? In a bullish case, which I'd give about a 40% probability right now, buyers step in, focusing on the long-term AI narrative and record growth. For this to happen, we would need to see the price firmly reclaim the $525 level, then break above the post-earnings gap. This would be reinforced by positive sentiment returning to the broader tech market. In a bearish scenario, which I see as more probable at 60% in the short term, the concerns over spending and margins continue to weigh on the stock. A break and close below the recent low of $514 would be a strong confirmation of this, likely leading to a test of the $500 support level. Keep a close watch on any new statements from Microsoft's management regarding capital expenditures and any updates on their Azure capacity. Ultimately, the market needs to decide if it believes the AI investment will pay off sooner rather than later. And that wraps up our detailed analysis of Microsoft. Please remember, this video is for informational purposes only and is not financial advice. You should always conduct your own research and make investment decisions based on your own individual circumstances. Thanks for watching Explain the Charts, and we'll see you in the next one.